Hi, folks, and welcome to the Monday, June 14th edition of Money and Politics. And I hope you had a great weekend. I did. It was nice to enjoy some beautiful weather that we had in the central Illinois region. And by the way, I have the window open because it's low humidity and a beautiful day here. So if you hear a bird chirping in the background, it's because I have the window open. If you want to follow me on Twitter, some days I post things that are kind of breaking news or updates. And we're going to be talking about a couple of things that did appear on Twitter today relative to Humbl. If you want to email me, here's the email address. And I've had a number of interesting emails come in on the last number of weeks. So that's where you can get me there if you wish. Now, today on Humbl, it was kind of not a great day, right? We closed down 13 cents at 129. I'm going to maybe come back to that. Let's talk a little bit. Speaking of Twitter, we had Brian Foote, the CEO, post on Twitter. Excited to announce we've signed a Humbl podcast deal with America's #1 audio company, iHeart, and we'll be recording from a new studio at Humbl headquarter offices starting this August. So I don't tend to think necessarily of Humbl as being a broadcaster, but I have said in this day and age that everyone, it used to be I'd say, well, I work in television when people say, what do you do? And these days I say, everyone works in television. Everyone can be on TV. Everyone can be in front of a camera, just as I am doing this broadcast. And we see how many other people these days doing things. So the fact that Humbl is going to have a podcast where they can be talking, just as I've been covering the story, is, a good thing to get the message out. So now the other thing I'm going to say that I just also on Humbl that just came up, and this just came up just a little bit ago, is a cheat sheet from Drummer Dude 1969. So if you want to follow him or see this, and you could copy it for yourself, his handle on Twitter is at Drummer Dude 1969, and he posted this not too long ago as I'm coming to you, and it says updated as of today. It is a list of some of the different things that have gone on. I'm going to look, and what is most interesting, he says here in June of 2021, and it's a list of what's been done. Athletes First collaboration, Tickery acquisition officially closed. Fox Business interview. Rob Luna mentions I actually like Humbl, etc. And coming up are things very in the near term as well as things that might be happening a year from now. The Rob Luna, who is a money manager, Rob Luna visit coming to Humbl headquarters this week on the 17th. I'm taping this on the 14th. If you're watching this a couple of days later, Flag Day. The NFT hard launch with a collaboration from Monster LA and Athletes First. Humbl Pay launch phase 2 to 35 countries, totaling $1.8 billion. Humbl Pay launch phase 3 coming up down the road to 40 countries that have 2.8 billion people. We'll get the peer-to-peer launch, the uplist at some point to NASDAQ. I think that could be, I'm going to say in 2022. I don't think it's happening this year. You want to disagree with me, you can disagree. That's my gut feel. And a number of other things. You can go through. I'm not going to read all of that. But that's what's coming up. So thanks to Drummer Dude for putting that together. Shout out to you. Now, the other day I did mention, one of you wrote to me from the Netherlands. I asked if he wants his name used, and he said, no, please keep me anonymous, so I'll do that. But he's the one that recommended, and again from the Netherlands, our viewer, that Zynex is his top pick. I mentioned it the other day. I didn't buy it then. I did buy it today. In fact, I bought it right at the very end. And I know this is a little hard to read. Whoops. Sliding down. I was trying to, a little hard to read. But here, just before the close, that was at 342. Anyway, I bought it just about where it is now, right at about 1596. And fortunately for me, it fell at the end of the day, and I literally bought it, with about a minute left in the day. I'll do more coverage of this. I wanted to get it out to you right away and talk about it and have you put it on your list. I think this could be very promising. Now, this is a one-day chart. If you didn't see the other day, let me show you. Let's just click on. That's a 6-month chart, year-to-date, 1 year. They are. Here's a 5-year chart. Which they are adding a whole lot of new account managers, new salespeople, and they expect their revenues to be going up sharply in this year, based upon, there's always kind of a lag when you have salesmen added. So if you look in the right-hand column there, those green lines are revenue growth. Now you see the blue lines are profit. So again, they are profitable. The profit went down a bit because they put so much money into growing their sales force and some other things. They are gearing up for growth. And so I think that, if you don't want to buy now, keep an eye on it at least. What I often say, folks, is, and I think it's, as I've said so many times before, it's one of the best things about investing in the stock market is you can buy in bits and pieces. So my recommendation would be, just like I did today, I took a small position. I'll add to it as I go along, and if it goes down, then I'll buy some more cheaper. But if it goes up, at least I got on, right? I got on. So that's what I would say to you. If this takes off, at least you've got some shares. And you can see, and I mentioned this the other day again too, they're on the same cycle. They had a couple of misses here on the earnings period, but they just missed. They wasn't disastrous. And they had an earnings surprise to the upside. Last time they reported, their next earnings period is going to be coming out in July, just like Humbl's will be, and the estimate there is 6 cents a share. So there is that. Now, I know when we talk about Humbl, or frankly any stock for that matter, you see it going down. If we go year to date and we say, man, it kind of came down. The last month really hasn't been bad. That's been pretty good because we had that low of about 76 cents. And, we got all the way up here, and we were hoping we were going to go to $2. We did top out at about 170, 171, I think, or so. And, here we are down 50 cents from just June 7. So just about 1 week ago. But this is the nature of the market. And, sometimes, folks, and I'm going to go back to something I've said in the past, and partly that is, I've told you before, I used to have a printing business, and I'm glad to be out of the printing business. So here's something, because I invest with Schwab, they've been sending me over the years, and you're going to get a little funky blue green screen kind of impact here. But this is On Investing, their magazine. Now, they say on here, and you can't read it, but right here, this is the last print issue. So when I used to be in the printing business, I'm glad to be out. I got out in 1989. I was still quite a young man. But, I feel for the guys and gals who work at this printing company, and this would have been a nice thing for them to have. But I bring it up because Charles Schwab, the founder, wrote this column, Easy Does It, and it applies to anytime you buy a stock and the price goes down. And you can go back at some of the videos I've done in the past. It was probably when it was cold outside, but I did a video saying that managing your emotions is one of the real tricks to being a good investor. And I want to read to you, if you excuse, I know this is not great television, but I'm going to read a little bit of the column, and I need to, it's a little too dark here, so what Charles Schwab says. It's just a couple of paragraphs, but pay attention. I think it's important to you. He starts off by saying, don't let market volatility throw you off course. A churning market can become a breeding ground for bad decisions if investors let their emotions get the better of them. The COVID crash in early 2020, when the market fell by 30% in a matter of weeks, is one such example. A big drop like that often elicits panic selling, but fleeing the market when times get tough can make it harder for you to reach your goals. The Schwab Center for Financial Research found that an investor who started 2020 with a $100,000 portfolio and missed the 10 best days of the stock market performance would have ended the year with $51,000 less than if they had just stayed fully invested in the entire time, despite the 30% drop. Indeed, 5 of the best days occurred alongside 5 of the worst, meaning that those who sold to avoid further losses missed out on that meaningful recovery. Figures like these are a good reminder that sticking to your plan, even when things look grim, is often the best course of action. Crisis passes, and turbulent markets eventually stabilize, and those who remain steadfastly invested are often the better for it. And that written by Charles Schwab, the founder of the company, and certainly a Hall of Fame investor, I would say. So that's some good things to remember, folks, when we get these markets where they're choppy and they go up and they go down and they go up and they go down. And I would say that it can be very tough at times to hang in there. But also, if you buy a good part of your portfolio is in the broad market, and by that I mean the S&P 500 or the NASDAQ or even the Dow 30, where you buy those in one fell swoop and you get broad diversification, that in addition to holding on to individual stocks, whether it is, Humbl, whether it is Zynex, as we're talking about here, having both individual stocks as well as some of the broad markets is a good way to keep yourself balanced, keep yourself out of trouble. And if you want, or what I would say, as things go up, where they go up certainly beyond the choppiness part, like what we've seen with Humbl, then here and there take some shares and take a little profit. And then if it does go back down, you can go back in and buy some. That's the way to trade. That's the way to kind of keep yourself balanced. You don't have to hold on indefinitely to every single share you buy of any stock. But it's good to not get all the way off the bus unless you're in some company that it just becomes a disaster. If a company is becoming a disaster, then you want to, go ahead and get off of it. But when we talk about Humbl, and going back to what we see here with the drummer dude's nice cheat sheet, there's a long list of reasons as we look at this that Humbl can be going up over a period of time. And so as it goes up, there's nothing to say that you can't, sell one share, 1,000 shares. I would just say, though, when you have a stock that has a heck of a lot of potential, don't get all the way off the bus, as I say, because then you're going to be regretting that for years to come, just as you would right now if you had held 100 shares of Amazon, and then back in 2005 you decided, for whatever reason back then, that you just wanted to get rid of it, get out of it, because it just wasn't growing the way you expected it to grow, you'd still be kicking yourself mightily, 20 years, 15 years later. You don't want to be in that position. So, folks, I hope you had a great weekend. I did. I hope you have a great night and a great rest of the week. I'm going to be off on Friday, going to Chicago to see my son, but we'll be talking to you throughout the week and keeping an eye on the markets. In the meantime, have a good night, and we'll see you tomorrow.